are required. Part 1, the current shortfall in labor hours at maximum demand, and part 2, the optimum demand product mix and the resultant profit. So when you read through this question, you need to interpret it and understand in which subtopic or from which topic the question has been derived from. And so the question is from marginal costing, application of marginal costing. And so the question is requiring us to calculate in Roman number 1, the shortfall. So before I explain what a shortfall is, I'll try to interpret for you the question so that you are able to understand better. A shortfall arises where we have a shortage. We have what we refer to as a limiting factor, decisions with the limiting factor. And decisions with the limiting factor normally arises where a firm has an objective of attaining a specific level of activity, but we have some factors that limit that particular firm from realizing that objective. And so any factor that has a limiting effect on the objective of the firm is what we refer to as a limiting factor. And that limiting factor is what brings about a shortage. And so when we talk about shortfall, we are simply referring to a shortage. So according to this question, this firm intends to produce a number of units for 3 products, X, Y, and Z. But we have been told in note number 2 that labor hours are currently limited to 25,000, meaning though the firm wants to produce this number of units, it is only limited to 25,000 hours. So the question is, if we have only 25,000 hours, will the firm be able to produce all these units, or is it limited from production of all the units? So if the firm is limited, then we say labor hours is a limiting factor. And where we have a limiting factor, then we have to make a decision. So we'll be looking at how do we make decisions where a limiting factor exists. And that's what we want to do. So whenever you are given such a question, what you look or need to consider is this labor hours a limiting factor? So to prove whether labor hours is a limiting factor, we calculate in note number 1 what we are referring to as a shortfall. So we'll begin by doing that. How do we calculate a shortfall? In note number 3, we were told that the maximum demand for product X, Y, and Z are 2,000 units, 1,800 or 1,800 units, and 3,000 units. And then we have been told that labor hours currently are limited to 25,000 hours, paid at an annually rate of 8 shillings during the production period. So that means that labor hours is likely to be a limiting factor. So when you come to that table where we have variable cost per unit, we were given labor, and this labor is given in shillings for product X, Y, and Z. So what we need to know is how many hours will be used to produce 1 unit of each product. So you are told that paid at an hourly rate of 8 shillings. So if 8 shillings equates to 1 hour, then how much will it take to produce 1 unit given 24 hours for product X, 44 for Y, and 32 for Y? So for us to do that, this is the format you will use. So we'll show the product, which is X, we have Y, Z, and then introduce the total column. So we have maximum demand, the maximum demand for product X is 2,000. This is in units. 2,000, this is 1,800, and this is 3,000. So we want to know how much time will it take to produce 1 unit of product X. We want to produce, or a farm wants to produce 2,000 units of X. But how much time does it take to produce one unit? So we'll have our workings here. Working number 1, we'll look at labor hours required per unit. So we'll show for X, for Y, and for Z. These are products. So we were told in note number 2 that labor hours are currently limited to 25,000 hours paid at an hourly rate of 8 shillings. That is 8 shillings during the production period. So we are asking ourselves, if to produce 1 unit, that is of X, not 1 unit, sorry. If 8 shillings will be paid for each hour worked, and 24 shillings were paid for product X. In that table, labor was 24. If 8 shillings are paid for 1 hour and 24 shillings were paid, then how many hours were used in the production of product X? So to calculate this, we are taking 24 shillings. We are taking 24 shillings. 24. We multiply by 1, then divide that by 8. So this will give us, not shillings, this will give us 3 hours. 3 hours per unit. 3 hours per unit. So that means the labor hours required per unit for X is 3 hours, which is this. You do the same for Y. In the question, 44 shillings were paid for production of Y. So if 8 shillings is being paid for each hour and 44 was paid, then how much hours were used in the production of product X, Y? So we are taking 44 divided by 8. And this will give us 5.5 hours. For Z, 32 was paid. We are paying 8 shillings per hour. So we are taking 32 shillings, and then we are dividing by 8 shillings. What will we get? This is 4 hours. So we are to bring these hours, labor hours required per unit. So for X, we have 3 hours. For Y, it is 5.5 hours. For Z is 4 hours. So if to produce 1 unit of product X, you require 3 hours. What about 2,000? If to produce 1 unit of X, you require 3 hours. What about 2,000 units? How much time is that? So we are simply taking 2,000 multiplied by 3 hours. And whatever we get will be the total number of hours required. So that will be 2,000 times 3, which is 6,000 hours. So we simply multiply. And whatever we get will be the labor hours required. So this is 6,000. Then 1,800 times 5.5. This is 9,900 hours. You do the same for Z. This is 12,000 hours. Then from there we get the total. So we have 6,000 plus 9,900 plus 12,000. And this will be 27,900. Then we have labor hours available. In the question, note number 2, we were told that labor hours are currently limited to 5,000 hours. So the labor hours available according to the question is 25,000 hours. So to get the shortfall, we are simply getting the difference, which is 27,900 minus 25,000. And this will be 2,900. So that is the shortfall. And you will have answered part 1 of the question. So how do we interpret this? It simply means that the firm is only having an available number of hours of 25,000. And what is required is 27,900. And that means it will not be able to produce all. Why? It is limited to 25,000, which cannot be able to help to produce all these units. And therefore, 2,900 is a shortage. So how do we now make a decision when this factor is existing? We now move on to part 2, where we are required to show the optimal product mix and the resultant profit. So once you have determined the shortfall, the next step is to know which product should be considered first. Remember, the firm cannot be able to produce all these products. And if it is to produce all these products, then it will not produce all the units as it had planned. Why? It is having a shortage of 2,900 hours. And so it has to make a decision which one should be produced first. And to do that, the firm has to look at which are the most profitable products. Between X, Y, and Z, which one should be considered based on the profitability. And to do that, we are to calculate what we refer to as contribution per unit of limiting factor.